Today we'll talk about some major IRS updates that could directly impact your wallet. The IRS has been dropping some big announcements recently, and with everything going on, you might have missed them. Millions of Americans are feeling the pressure right now. Inflation is no joke. December alone saw a 2.9% surge, and people are looking for any kind of relief they can get. So whether you're waiting on that $1,400 stimulus check, trying to figure out your tax filing deadlines, or curious about changes to your 401k, this video breaks it all down. Oh, and if you find these daily updates helpful, hit that like button. It really helps the channel grow. Let's dive right into these stimulus checks. Remember those? They were a lifeline for many during tough times. A lot of you are probably still waiting on that $1,400, especially if you filed your 2021 tax return a certain way. It's frustrating, I know. The IRS is finding that a lot of people who filed their returns left the recovery rebate credit information blank. This small oversight can have big consequences. Some people even put down 0, thinking they didn't qualify. It's an easy mistake to make, but it can cost you. Now here's the thing, if you were eligible for that stimulus money based on your 2021 income, but you didn't fill out that section correctly, you might have missed out. And that's a real bummer. Here's the deal. The IRS uses the information from your tax return to figure out how much stimulus money to send you. It's all about the details. So if that section is blank or shows 0, they're going to assume you didn't qualify or didn't want the money. It's a simple but critical part of the process. Now, the good news is the IRS is working on fixing this. They're aware of the issue and taking steps to address it. They're going through those returns manually, trying to identify people who might have missed out. It's a painstaking process, but necessary. But here's the thing, that takes time, a lot of time. The IRS is dealing with a massive backlog. The IRS is swamped right now, dealing with a backlog of returns and all these new updates. It's a monumental task. So if you're one of those people who left that section blank, you might be waiting a while. Patience is key, but there are steps you can take. My advice? Don't wait around for the IRS to figure it out. Be proactive. Take control of your situation. Go back, check your 2021 tax return, and make sure you filled out the recovery rebate credit information correctly. It's worth the effort. If you didn't, you can always file an amended return. It's a straightforward process that can save you a lot of hassle. It's an extra step, but trust me, it's better than waiting months for the IRS to sort it out. You'll thank yourself later. And hey, while we're on the topic of stimulus checks, let's talk about the possibility of another round. It's a hot topic right now. Now, I know what you're thinking. Graham, you said this was about IRS updates, not speculation. And you're right, but it's all connected. But here's the thing. The IRS plays a crucial role in distributing those stimulus checks. They're the ones who make it happen. So if there's any talk of another round, the IRS is going to be involved. They're the backbone of the operation. Now, I'm not saying another stimulus check is guaranteed. Nothing is set in stone. But with inflation still high and a lot of people struggling, it's not entirely out of the question. The need is real. The government knows that putting money directly into people's pockets can help stimulate the economy. It's a proven strategy. So keep an eye out for any news or announcements from the IRS or the government about potential future stimulus payments. Stay informed and be ready to act. Okay, enough about stimulus checks for now. Let's shift our focus to something equally important but often dreaded. Let's talk about something else that's probably on your mind: taxes. Yes, it's that time of year again when we need to start thinking about our financial responsibilities, specifically the 2025 tax season. It might seem far off, but it's never too early to start preparing. It seems like we just finished up with the last tax season. But trust me, getting a head start can save you a lot of stress later on. Time flies, especially when it comes to taxes. Before you know it, deadlines will be looming. The IRS has already announced some important dates for the 2025 tax season, so you can mark your calendars and get a head start. Being proactive can make a world of difference. First things first, the official start date for filing your 2024 taxes is January 20th, 2025. This is when the IRS will open the gates for submissions. That's when the IRS will begin accepting and processing tax returns electronically and by mail. So whether you prefer digital or traditional methods, you can start filing then. Now, if you're like me, you probably like to file your taxes early and get it out of the way. Early filing can also mean an earlier refund, which is always a plus. But here's the thing, even if you file in January, the IRS won't start processing those returns until February 18th, 2025. So don't be alarmed if you don't see immediate action. Why the delay, you ask? It's a common question, and there's a good reason for it. The IRS needs time to get their systems up and running, make sure everything is working smoothly, and prepare for the onslaught of tax returns. It's a massive operation that requires precision. It's like the calm before the storm. Once everything is set, the process can move forward efficiently. And speaking of storms, the tax filing deadline for 2025 is April 15th, 2025. This is the date you absolutely cannot miss. That's right, the usual April 15th deadline applies, so don't miss it. Missing this deadline can result in penalties and interest, which no one wants. Now, before you panic about remembering all these dates, do yourself a favor and set a reminder on your phone. Technology can be a lifesaver in these situations. Better yet, create a calendar event and set it to repeat every year. This way you won't have to worry about forgetting important tax dates in the future. That way, you'll never miss a beat when it comes to tax season. Staying organized can lead to a more relaxed and enjoyable time with your loved ones. But wait, there's more. The IRS has also announced the deadline for employers to provide W-2 and 1099 forms. Employers, listen up. This is crucial for your employees' tax filings. You have until January 31st, 2025 to send out those forms to your employees and contractors. This deadline ensures that everyone has the necessary documents in time. That gives you plenty of time to gather all the necessary information and make sure everything is accurate. Accuracy is key to avoiding any issues down the line. And employees, if you haven't received your W-2 or 1099 by the end of January, don't hesitate to reach out to your employer or client and ask for it. It's your right to have these documents on time. You need those forms to file your taxes accurately and on time, so stay vigilant and proactive to ensure a smooth tax season. Let's move on to something a little more exciting than tax deadlines: 401k employer matches. This is one of the most beneficial perks you can get from your employer, and it's something that can significantly boost your retirement savings over time. Now, if you're not familiar with how 401ks work, here's a quick rundown. It's a retirement savings plan sponsored by your employer, and it offers some great tax advantages. A 401k is a retirement savings plan that allows you to contribute a portion of your paycheck before taxes are taken out. This means you can save more money faster because you're not paying taxes on it up front. This means you get a tax break on the money you contribute, and your money grows tax deferred until you withdraw it in retirement. Essentially, your savings can grow more quickly because they're not being reduced by taxes each year. Now, here's where it gets even better. Some employers offer a 401k match, which is essentially free money. This is one of the best benefits you can get from your employer. An employer match means that your employer will contribute a certain amount of money to your 401k based on how much you contribute. It's like a reward for saving for your future. For example, your employer might match 50% of your contributions up to 6% of your salary. This can add up to a significant amount over time. So if you're contributing 6% of your salary to your 401k, your employer will kick in an extra 3%. This is a fantastic way to accelerate your retirement savings. It's like getting a bonus just for saving for retirement. And who doesn't love a bonus? Now here's where the new guidance under the Secure 2.0 Act comes in. This new legislation has introduced some exciting changes that can benefit employees even more. This new law allows employers to match student loan payments with contributions to their employees' 401k plans. This is a groundbreaking change that can help many people. That's right, you heard that correctly. If you're making payments on your student loans, your employer can now contribute to your 401k based on those payments. If you're struggling to pay off student loans, your employer might be able to help you save for retirement at the same time. This can be a huge relief for many people. Here's how it works. Instead of matching your 401k contributions directly, your employer can choose to make contributions to your 401k based on the amount you're paying towards your student loans. This means you can still benefit from an employer match even if you're focusing on paying down debt. So even if you can't afford to contribute a lot to your 401k right now because of your student loan payments, you can still benefit from an employer match. This is a great way to ensure you're not missing out on valuable retirement savings. This is a game changer for people who are saddled with student loan debt and struggling to save for retirement. It provides a way to make progress on both fronts simultaneously. You can reduce your debt while also building your retirement nest egg. Now, it's important to note that not all employers offer a 401k match, and not all employers who offer a match will be participating in this new student loan matching program. It's always best to check with your employer, but it's definitely something worth looking into if you're currently paying off student loans and want to boost your retirement savings. This could be a significant opportunity for you. Talk to your employer or HR department to see if they offer a 401k match and if they plan to implement this new student loan matching option. It's a conversation that could greatly benefit your financial future. And there you have it, your IRS updates for the week. We've covered a lot of ground today, from stimulus check eligibility to tax filing deadlines to changes in 401k employer matches. But keep in mind, this is just a snapshot of what's happening in the world of personal finance. The IRS is constantly updating its guidelines and regulations, so it's crucial to stay informed. There's a lot of talk about potential changes to child tax credits, and with the Trump administration coming in, we might see some shifts in tax policies. That's why I'm here, to break it all down for you in a way that makes sense. Make sure you're subscribed to the channel and hit that notification bell so you don't miss any future updates. Thanks for watching, and remember, the more you know, the better equipped you are to make smart financial decisions.